Palantir's recent dip has raised eyebrows as its stock slid by over 20% this week, leaving many to wonder if this is the beginning of the end or a rare opportunity. With the sell-off sparking concerns, let's look closely at what's happening and why. This drop largely comes down to a shift in Palantir's investor base. A significant number of short-term traders, swing traders, day traders, and speculative investors have been involved in Palantir mainly because it's been a trending, volatile stock. Now, with other high-stakes options available, like various cryptocurrencies and alternative tech stocks, many of these traders are cashing out to chase faster returns elsewhere. This departure has created a clear out of these short-term holders, leaving behind investors focused on the long-term potential. For serious investors, this cleanup might be more of a blessing than a curse. Many of these short-term traders weren't in it for Palantir's long-term growth potential, which is where the real opportunity lies. While they panic sell, long-term believers are taking advantage of the price drop to pick up shares at a bargain rate, close to $20.40 as of now. This kind of dip, especially in a promising tech stock, opens doors for investors who believe in Palantir's future and are looking for a long-term position. Comparing Palantir with other high-growth tech companies, the numbers reveal a potential advantage. Palantir is currently trading at around a 29x price-to-sales ratio. Now, that might seem high, but when lined up against its peers, Palantir actually looks affordable. For example, CrowdStrike trades at around 53x, Datadog hovers above 100x, and Snowflake exceeds a whopping 120x. In the world of disruptive tech and data analytics, this relative valuation could suggest Palantir is undervalued, especially considering its strong fundamentals. The financial health of Palantir tells a compelling story. Last quarter alone, the company's free cash flow was over $200 million. That's real, positive cash flow, which is a critical milestone for tech companies in this space. Even more encouraging is the expectation that Palantir's revenue will continue to grow at approximately 40% next year. The company is steadily increasing its client base, both in commercial and government sectors, indicating strong demand for its services. Fundamentally, Palantir is arguably in its best shape yet. Additionally, it's important to note that CEO Alex Karp has recently completed a series of option sales that date back nearly a decade. With that out of the way, Karp's selling activity should ease, which means less pressure on the stock from executive sales. This stabilization can help the stock recover, particularly as some speculators may be selling prematurely, unaware that Palantir's management is in a strong position to hold. For those committed to the long haul, these moments of panic in the market often look like a Christmas sale. There's emotional selling happening, but to disciplined investors, this means opportunity. Palantir has a unique edge in the data-driven world, and while the current price might be worrying for some, it represents a discount for others who see beyond the daily fluctuations. In the end, Palantir might not be for everyone. There are critics, and some will argue it's overhyped or mispriced. But for those who understand the fundamentals, this tech giant's potential in the data analytics space is significant. Sure, it's possible the stock may dip again. After all, the market is unpredictable. But for those with a 2030 vision, Palantir's path is just beginning.